with the market stalling to establish over the 0.04 level again. We'll play some Fibonacci time zones based on the last downswing along with a Fibonacci extension. Then add some Fibonacci spirals, concentrating on the upswing from March 20th, which can tell us there's higher potential for resistance even if price continues to rise back to the previous high. Most notably around the area where the 0.045 level intersects with the spirals and converges with the 0.382 and number 5 Fibonacci time zone lines. If there is more follow-through to drop from today's bearish candle, price will likely not drop very far, as there's greater potential for long-term support around the 0.03 to 0.027 range, which will be highly relevant if price develops this downward channel further into April. Ripple on a steeper decline looking to hold in the 60s. The previous uptrend and the most recent bearish retracement are good choices for the regular Fibonacci time zone. And like the last chart, a Fibonacci spiral on the upswing from March 20th is a natural choice. If price can keep consistently closing in the 60s, the chart can likely keep this horizontal range going. A bearish continuation is only more likely if price closes under 60 and into the lower half of the Fibonacci fan. For more on Fibonacci analysis techniques, check out the dozens of videos already on the channel.